Imagine if there were ways to make your money work for you, growing steadily year after year without much effort. That's precisely what compounding assets do. You might be wondering, what exactly are compounding assets? Well, they're like magical money machines that multiply your wealth over time. Instead of just sitting in a piggy bank, these assets grow on their own, making you richer year after year. In this video, we'll explore 10 incredible compounding assets that have the potential to boost your wealth consistently. Stick around to discover these compounding assets that could pave the way for a brighter financial future. Let's get started. Asset number 1. Stock market. The stock market is the heartbeat of the financial world. Imagine owning a tiny piece of big companies like Apple, Microsoft, or Google. When you invest in stocks, you're essentially buying a share of these companies. Over time, as these companies grow and thrive, so does the value of your shares. Investing in stocks can be a roller coaster ride. Prices can go up and down like a yo-yo due to various factors like company performance, economic conditions, or even global events. But history tells us that, despite these fluctuations, the stock market tends to rise over the long run. Here's where the magic of compounding comes in. Say you buy shares of a company and it grows by 8% in a year. The next year, if it grows another 8%, you're not just earning 8% on your initial investment, but also on the gains from the previous year. Over time, this snowball effect can potentially turn a small investment into a significant pile of wealth. However, it's crucial to diversify your stock portfolio, spreading your investments across different industries and companies to reduce risk. Also, having a long-term mindset and staying calm during market fluctuations is key to reaping the rewards of stock market investing. Asset number 2. Real estate. Picture this: owning a home or a piece of land that's yours, a place where you can live or rent out to others. Real estate is like planting seeds in the ground and watching them grow into something more valuable over time. When you buy property, its value can increase over the years. This growth in value is called appreciation. Additionally, if you rent out your property, the rent you receive becomes a source of income, making real estate a double-edged sword for wealth building. But like any investment, there are things to consider. Property taxes, maintenance costs, and finding good tenants are just a few challenges. Yet, despite these hurdles, real estate has been a historical wealth creator. The secret sauce lies in location, demand, and timing. Buying property in areas with growing demand, like bustling cities or upcoming neighborhoods, can lead to higher appreciation. Plus, if you hold on to it for a while, you might just hit the jackpot in terms of value. Remember, real estate is a long-term game. Patience and smart decision-making are the keys to reaping the rewards it offers. Asset number 3. Bonds. Bonds are like lending your money to someone, a company, or the government, and in return, they promise to pay you back with interest over a set period. Unlike stocks, bonds are more about stability and regular income rather than big growth. They're like a reliable friend who always pays you back on time. When you buy a bond, you're essentially loaning your money, and in return, you get regular interest payments until the bond matures. Governments and big companies use bonds to raise money for projects or expansions. They're generally considered less risky than stocks because, in most cases, they're backed by the issuer's promise to pay back the borrowed money. There are different types of bonds, like government bonds, corporate bonds, or municipal bonds, each with its own risk level and potential returns. For instance, government bonds are often considered safer because they're backed by the government's credit, while corporate bonds might offer higher returns but with a bit more risk. Bonds are an essential part of a diversified investment portfolio, providing stability and a consistent income stream, making them a good option for those seeking a more balanced approach to investing. Asset number 4. Dividend-paying stocks. Imagine owning shares in companies that not only grow in value but also give you a slice of their profits regularly. These are dividend-paying stocks. When you invest in dividend-paying stocks, you're not just hoping for the stock price to go up. You're also looking forward to receiving dividends, a portion of the company's profits, on a regular basis. Companies that pay dividends usually do so quarterly or annually. These dividends can be a reliable source of income, especially for those looking for steady returns. Plus, here's where compounding works its magic again. If you reinvest your dividends back into buying more shares, those new shares can also start earning dividends, creating a cycle of growth over time. However, not all companies pay dividends, and those that do might change their dividend payouts based on their financial performance. It's essential to choose wisely, looking for companies with a history of consistent dividend payments and a strong financial footing. Dividend-paying stocks can be a smart addition to your investment portfolio, providing both growth potential and a steady stream of income, making them a favorite among investors seeking stability and long-term gains. Asset number 5. Cryptocurrencies. Enter the digital world of cryptocurrencies. It's like money that lives on the internet. Unlike traditional currencies backed by governments, cryptocurrencies operate using decentralized technology called blockchain. Bitcoin, Ethereum, and other cryptocurrencies have caught the attention of investors worldwide due to their potential for high growth. However, it's essential to remember they're highly volatile, meaning their prices can swing wildly in a short time. Cryptocurrencies offer a unique opportunity for those willing to take risks. Some people see them as a hedge against inflation or a way to diversify their investment portfolio. Others are fascinated by the technology behind them, believing it could revolutionize the future of finance. But beware, the crypto world isn't without risks. Hacks, regulatory changes, or market sentiment can cause significant price fluctuations. It's crucial to research and understand the crypto market before diving in. Investing in cryptocurrencies requires careful consideration. It's often advised to only invest what you can afford to lose and to stay updated with market trends. While they can offer high rewards, they come with equally high risks, making them suitable for investors with a higher risk appetite. Asset number 6. Index funds. Think of index funds as a basket holding lots of different fruits instead of putting all your apples in one basket. They're a collection of stocks or bonds that aim to mimic a particular market index, like the S&P 500. What's fantastic about index funds is their diversification power. Instead of picking individual stocks, index funds spread your investment across many companies. This diversification helps reduce risk because if one company doesn't do well, the impact on your investment is less compared to owning just that one company's stock. They're like the set it and forget it of investing. You don't need to actively manage them like you might with individual stocks. They aim to match the performance of the index they track, which often outperforms many actively managed funds over the long term. Another plus, they often have lower fees compared to actively managed funds because they follow a set strategy without the need for frequent buying or selling. For those looking for a simple yet effective way to invest in the broader market while minimizing risk and fees, index funds can be a great choice, offering stability and long-term growth potential. Asset number 7. Retirement accounts. Picture this, the special savings account just for your future self. Retirement accounts, like 401ks or IRAs, individual retirement accounts, are designed to help you save money for retirement while giving you some sweet tax advantages. These accounts act like a cozy nest egg, allowing you to put away a portion of your earnings for the golden years. What's cool about them is the tax benefits they offer. When you contribute money to these accounts, you might get a tax break now or enjoy tax-deferred growth, meaning you don't pay taxes on the gains until you take the money out in retirement. Employer-sponsored plans like 401ks often come with the added perk of employer matches, where your employer chips in a percentage of what you contribute, essentially giving you free money. The earlier you start contributing to these accounts, the better. Time is their best friend. By starting early, your money has more time to grow, thanks to the power of compounding. Retirement accounts are like planting seeds for your future happiness and comfort. They are an essential tool in securing a financially stable retirement, providing tax advantages and potential employer contributions that can significantly boost your nest egg. Asset number 8. Peer-to-peer lending. Imagine being the banker and lending money directly to people or small businesses. That's peer-to-peer lending, where individuals like you and me can become lenders, cutting out traditional financial institutions. Platforms for peer-to-peer lending connect borrowers who need loans with investors looking to earn interest on their money. As a lender, you can spread your investment across multiple loans, reducing the risk of any single loan defaulting. This type of investment can generate passive income, as you receive regular interest payments from the borrowers. However, it's essential to note that peer-to-peer lending isn't without risks. Some borrowers might not pay back the loan, leading to potential losses. That's why diversification across multiple loans becomes crucial to minimize the impact of defaults. Due diligence is key when selecting loans to fund. Assessing borrower profiles, creditworthiness, and loan purposes helps in making informed lending decisions. Peer-to-peer lending can be an attractive investment option for those seeking higher returns than traditional savings accounts while diversifying their portfolio. Yet, it's essential to understand the risks and do thorough research before diving into this lending arena. Asset number 9. Collectibles and antiques. Think of collectibles and antiques as treasures from the past that could turn into valuable assets for the future. These items, whether it's rare coins, vintage toys, art, or historic artifacts, can appreciate in value over time. Investing in collectibles and antiques can be a fascinating journey. Some people are drawn to the beauty and history these items carry, while others see them as potential investments. Unlike traditional financial assets, the value of collectibles can be influenced by factors like rarity, condition, and demand from collectors. However, diving into this investment avenue requires careful consideration. Authenticity, provenance, and market trends play a crucial role. Not all collectibles turn into treasures, and their value can fluctuate based on trends and collector interests. Collectibles and antiques can offer diversification to an investment portfolio, acting as tangible assets outside the traditional financial market. But it's important to research and understand the market before investing, and consider these assets more as a passion-driven investment rather than solely for financial gain. Asset number 10. Education and skills. Consider education and skills as the tools in your toolbox that can build a stronger and more prosperous future. Investing in yourself through education, learning new skills, or enhancing existing ones can significantly impact your earning potential and career growth. Education doesn't necessarily mean formal degrees from universities, though they're great too. It includes continuous learning, gaining certifications, or mastering skills that are in demand. This investment in yourself can lead to better job opportunities, promotions, or even entrepreneurship. In today's fast-paced world, skills become invaluable assets. Learning coding, digital marketing, graphic design, or even soft skills like communication and leadership can open doors to various career paths. The returns from investing in education and skills aren't just monetary. They can lead to personal growth, increased confidence, and a broader understanding of the world around you. Remember, investing in education and skills is a lifelong journey. Embracing a learning mindset and adapting to changing industries and technologies can pave the way for a fulfilling and successful career. It's an investment that always pays dividends in both professional and personal development. And there you have it, folks. These 10 compounding assets, much like seeds planted in fertile soil, have the potential to grow and enrich your financial garden year after year. Remember, the key lies not just in planting these seeds, but in nurturing and allowing them time to flourish. So, which of these compounding assets will you start planting in your financial garden? Share your thoughts in the comments below. Don't forget to like and subscribe for more insights on growing your wealth. Until next time, happy investing.